What's going on, everybody? Michael Silva here, back from LA. You're watching the Stock Market Brief Show. In today's episode, we're talking about the bulls and the bears. They don't just want this to happen, they need it to happen, and I'm talking about a bounce. Why? Well, when that CPI report came out hotter than expected from consensus, the market reacted very poorly, having its worst day since 2020. All right, so they need a bounce to take place because it was such an aggressive move. The bears, they want the bounce so they can reposition themselves. And the bulls, well, the bulls got hot and heavy about this 3-day rally, and now we have some trapped supply up here. So in order to mitigate some of that, those trapped bulls, they're going to want to unload their position or see some sort of relief move here in the very near future. Now, what was very interesting was the Fed watch tool and the probabilities of the rate hike. You can see the market trying to price this in now. Now we have, our current target rate is 225, right? 225 to 250, so 225 basis points. And you can see here, there's the 50 basis point, it's off the table. It looks like we're going to be getting a 75 basis point hike to 300, all right? However, now we have a 100 basis point probability too on the rise. Now, I don't think we're going to get 100 basis points. If we do, I think the market's going to have to also price that in, but a 75 basis point hike looks likely coming into the September meeting. However, if you div to the next month in November, what I found interesting here was now the market is pricing in larger increase to a probability of two 75 basis point rate hikes, and they're decreasing the possibility here of the target rate being 350. So it looks like the market's trying to interpret the next two meetings are going to be 75 and 75. Now, Samantha had posted this earlier. She's a trader that I follow on Twitter. Only a 75 basis point rate hike now considered to be dovish. And speaking of timing, with $95 billion in quantitative starting tomorrow, can we get a mini bond rally? Well, I found this funny when she said, okay, yeah, the $95 billion in quantitative tightening starts tomorrow. Well, guess what? I mentioned this a few times. It's fitting to start ramping up quantitative tightening on the 14-year anniversary of Lehman Brothers filing for bankruptcy. Yep, that is tomorrow. Elon Musk is talking about the Fed here too. A major Fed rate hike risks deflation. Okay, so what should the Fed do? Drop it by 25 basis points. Sure, that's what they're going to do. Nope, they're going to keep going until something most likely breaks. And I found this kind of interesting because you can just look at a chart of Tesla, since dating back to 2019, and he knows what's going to happen during quantitative tightening, right? We're in a period of distribution. Most possible, it could be distribution, right, if it plays to the downside. And the next stage in this is decline, all right? Not to say that's going to be the case, but that is the next stage. If this is the accumulation stage, markup phase, then we go to distribution. The next final stage is decline. And during a quantitative tightening cycle and rate hikes going up, guess where markets, what's going to get hit? It's going to be the stocks that haven't been affected too much this year. And if you just look at the top 10 holdings, well, you got Apple, Microsoft, Amazon, Tesla. Apple has not got hit pretty much at all this year. So you can expect Tesla to be one of the proponents that gets hit and Apple to get hit, especially if we continue this path of tightening. Now, talking about this area of distribution, if you just pull up insider trading of Tesla, look at dating back in this is just 1 year. The only orders that we're seeing from Elon Musk are sell orders. So clearly he's in a period of distribution here too as well. I know that gets a little bit more into detail about the Twitter deal, about this, about that. Who really knows his intentions other than what he just kind of posts on the Twitter. And also about Apple, what I found interesting here too is if you look at a relative strength line, it's been putting in higher highs, higher lows. It's a safe place to be. It's like a consumer staple for the markets basically at this point. But if you apply a price momentum oscillator to the relative strength line, as this is pressing higher and higher, you're actually seeing lower highs in the momentum oscillator, which could be an early indication that we may see this stall out even further from a relative standpoint. Now, on the CPI report, what happened? The 10 and 2 curve continues to dive deeper into inversion. This has been the greatest leading indicator of a recession, despite what other people may be saying. This is just actually the case. If you just look at history, it's predicted every single recession, okay? 10-year and 3-month, it still remains flat as a pancake, still not inverted. Looks like it's going to, at some point, invert here. Dollar continues to grind higher, okay? And it has been a very orderly rise. It's been one of the best asset classes to be a part of in 2022. Now, when the dollar rises, S&P 500, equities, and various commodities get hit. We've seen commodities get hit, Okay, we've seen commodities go down, we've seen assets, stocks go down, all right, and we've seen bonds go down. We've seen everything getting hit, which takes us to stage 6 of the economic cycle, which we talked about in previous videos. But when can we potentially see a bottom in the market or a top in the dollar? A lot of people, and I posted this on Twitter, a lot of people have been calling the dollar top, all right? I don't know why, but price action just continues to grind higher. So I don't know why people are calling it a top. There's nothing that indicates a top. So far, it's just been a slow, steady grind of pulling back and putting in higher highs and higher lows. So my expectation, what I personally think, and this is just a narrative, all right, and I want to just get this thought out, because if you see it happen, you can be like, oh, yeah, it's not that I'm trying to be right. You can be like, oh, this could actually be the blow off top. So I personally think that the dollar's rise is going to be ending in an epic blow off top. So if that happens, at that point, it's going to offer up some amazing opportunities in various marketplaces, including, potentially, equities, potentially even gold at that point. Okay. However, if we get an epic blow off top, it's going to come at a time where nobody's going to want to step in to go long anything, right? There's going to be a lot of fear in the markets. All right. And what will cause a blow off top in the dollar? I don't know. I really don't, but I would imagine that if the Fed continues to raise rates and continues its path of quantitative tightening to reduce inflation, right? To fix what they did in 2020. I think that they'll continue that and something will eventually break, which sets the dollar off on a sky-high move on an epic blow-off top. They're going to end up trying to pivot and fix that, and that is when we'll probably see the dollar, reach its point and probably start sinking from there. That's just a narrative, my thought process. But it's something to keep an eye on, because if that does happen, if that does play out, it's going to offer up some great opportunities in the midst of a lot of fear. If we take a look at, speaking of fear, VIX, Volatility Index, 26.16 on the day. So it's in that, it's not too far off of 30. Careful in this region, right? This is like you're surfing Mavericks, right? I always use this as an analogy, but you got to be aware, in an environment, in an ocean where you see large waves. If you're new to surfing, or if you've never surfed, you don't just hop into Mavericks to surf. It's a very dangerous place to be. So you need to be very risk focused in these markets. Also to note, even on that big down day when the CPI report came out, the market still remains in contango. It's not in backwardation, looking at the VIX term structure, which, if we get some sort of backwardation move where, the front month right here of vol, fires up higher than this, in November or December, that could potentially indicate some sort of capitulation, and we just haven't seen it yet. If you take a look at a couple of the other volatility index products, like the NASDAQ closed at 32.57%, so it's above 30. Watch out, you are surfing some big waves right here. Russell volatility closed at 30.65. Watch out, you're surfing some big waves here. All right, and we saw that in today's price action. Price action was all over the place. All right, so let's look at the 15-minute time frames. We are outside of the weekly expected move, had a little bit of a positive divergence, and we popped up to the upside. And there's a possibility that we come test the lower weekly expected move and doodle around there for the remainder of the week, right? It's very possible that we start breaking down lower if we get below this level right here, which is 390. That 390 is a very key level because there's been a lot of price action in that region. Now we're below a 5-day moving average, which is neutral. It's going to start curling down the longer we stay down here, so be careful. I want to hop into some anchored VWAPs here. Okay, the anchored VWAPs can give us an indication of maybe potentially how to trade tomorrow's day. And if I take a look here, we're anchoring a move on the CPI report, right? So the CPI report came out, price action, it came up, rejected, came up, rejected, and then we saw this little bump up. So I'm thinking that if the SPY can get above, we're going to say 396, okay? This could be a potential, little double bottom here, right? And then we pop up into the next point, which is the September low right here, anchored VWAP, which is about 398. So I feel like if we get above this level, we can see a pop there. And if we get through this level, I think we go retest that 5-day moving average, and that could be a bounce that both the bulls and the bears are looking for possibility. Now, if you do trade and you're playing the breakout over here, watch what price does, right? Don't just enter right away. You want to see something like that and play, the breakout there, maybe up like something like that. And then maybe it comes up higher at that point. But make sure that you have a stop, here at the beginning, maybe here, if we see a little pullback or consolidation, something like that. Okay, if we take a look at the Qs, you can see here potential top and bottom on a positive divergence coming up into that lower weekly expected move for the week. Below a 5-day moving average, it's neutral. It's kind of turning around there too as well. And the same goes here for the anchored VWAPs on the 15-minute time frame. You can see, okay, we have that double bottom, potential double bottom, and then we have the price action close right at that anchored VWAP right there from the CPI low. Okay, so if we start getting above the anchored VWAP, which is just above 296 and some change, right here, that opens the door to test the September bottom VWAP, which is right over here, which is probably about 299, okay? And then if we start breaking above that, we have the 5-day moving average slightly above it. So very same situation. If we get some sort of, it would be nice to see something like that. You play the breakout, maybe add a stop here, maybe a stop there, play it up into here. And, if maybe it does something like that, that would be something that I would be looking for as far as a bounce goes. But understand the context, the overall context here on all these time frames is you'd be taking a long trade in a bearish context, all right? So you have to be very tactical. Now, on the flip side to all of this, if these don't hold, well, guess what? If we start cracking down these levels, right, it can get downright wicked, especially down here where I was talking about the 390 level. Okay, that's all I got for you on today's episode, everybody. I was only going to do the SPY and the Qs today to keep it a little bit compact. Hope you gave some insights into what it is that I'm seeing. That's all I got for you. See you later.